So the bank account is credited because bank is also an asset that increases on the debit side and decreases on the credit side. We've taken money out of the bank, so it means we've got less money, so we have to reduce our bank with 17,000 Rand, and this double entry is in the inventory account. Issued an invoice to L. White for 1,800 for goods purchased on credit. A profit of 50% on cost is maintained. Okay, so if we issue an invoice, it means that we sell goods for 1,800. So my one double entry will be in the sales account to indicate that there's an income of 1,800. The other entry will be in the debtors control because this debtor owes us the money. When we sell goods, we complete two double entries. One double entry at sales price and one double entry at cost price. So first of all, we'll record the one for the sales price. The debtors control is an asset. Assets increase on the debit side and decreases on the credit side. So the debtors owe us more money, so we will increase their debt on the debit side, and we indicate that the double entry is completed in the sales account. Sales is an income. Income increases on the credit side and decreases on the debit side. We increased our income with 1,800 when we sold goods, and the double entry is recorded in the debtors control account. A profit of 50% on cost is maintained. So that means that we have to go and calculate the cost price. If the profit is on cost, then the cost price is 100%. Cost price is 100, profit 50, sales price 150%. They gave us the sales price as 1,800. So if we want to know the cost price, the one that we want, 100, divided by the one that we know, 150, times 1,800, and that will give me 1,200 Rand. We sold some of the inventory, so it means that my inventory must decrease on the credit side with a cost price of 1,200. The double entry will be completed in cost of sales. So cost of sales is an expense. Expenses increase on the debit side and decrease on the credit side. So we will increase our expense with 1,200 and indicate that this double entry appears in the inventory account. Sold goods on credit to B Blue for 4,800. So we're selling again. So sales will be my one account, and Blue, that is a debtor, will be my double entry. That is for the sales price. Then we will calculate the cost price again to do the double entry for cost price. The debtors control will be debited with 4,800 to indicate that the debtors owe us more money, so my assets increased. We will credit our sales account. So sales on the credit side, we will show that the income increased with 4,800, and this double entry appears in the debtors control account. A profit of 25% on sales price was made. If the profit is made on sales price, then sales price equals 100%. Because the profit is on sales price is 100, profit is 25, so the cost price is 75% of the sales price. They've given us the sales price as 4,800. So if I want to calculate the cost price, the one that we want, 75, divide by the one that we know, 100. It is very important to distinguish between the profit on cost price and the profit on sales price. In this previous one, the profit was on cost price, therefore you divided 100 with 150. In this case, the profit is on sales price, so I'd say 75 over 100. Very important to read whether the profit is on sales price, then sales price is 100. If profit is on cost price, then cost price is 100. We sold goods, so inventory decreased. We've got less assets, so we will credit our inventory account and we will indicate that the double entry is in the cost of sales account. Cost of sales, the expense to sell the goods increased with 3,600 and the double entry is in the inventory account. Issued a credit note to L. White for 360 for goods returned. If we issue a credit note, it means that we will reduce the account of our debtors. So, as we did when we sold goods, we did two double entries. A double entry at sales price and a double entry at cost price. When goods are returned, the goods come back into the business. It means that we will have to complete a double entry at sales price and a double entry at cost price. And to determine the cost price, we will use this same profit percentage that we used in number 2. So first of all, we have to show that the debtor owes us less money and our income decreases with 360 Rand. Debtors control will be credited with the 360, that is the sales price of the goods. Because the debtors returned it, they owe less money, and we will reduce our income in the debtors allowances account. So debtors allowances is the expense that will increase on the debit side, and it will reduce this income that we had when we sold the goods. So debtors allowances is debited, and the account that was credited was debtors control. Okay, we have to use the same profit percentage that we used when we sold the goods to them. The profit was on cost price, so cost price was 100, profit 50, sales price 150. The credit note is at sales price 360. So if we want to calculate the cost price, we will multiply with 100, the one that we want to know, divide by 150, the one that's known to us, and that will give us the cost price as 240 Rand. We receive the inventory back, so inventory asset increases on the debit side with 240. The account that we will credit will be cost of sales. In the cost of sales account, we will indicate that this expense for cost of sales is decreased because now we didn't sell the goods. The meaning of cost of sales is the cost price of goods already sold. And this double entry will be in my inventory account. Issued a receipt to L. White for 600 after 20% discount was allowed. So here again we'll have to complete two double entries. The first double entry is for the money that we received, the 600. That means we will show that we paid 600 in the bank and that the debtors owe us less money. And then I will do an additional double entry for the discount. So first of all, for the payment, we want to show that the debtors decrease on the credit side with the money that they paid, 600, and we will debit our bank account to indicate that the money in the bank increased with 600 Rand. And this double entry is in the debtors control. So the word that we write in the ledger account always indicates to me where I can find the double entry. They say that we issued a receipt, so the money that we received was 600, and that was after 20% discount was allowed. So that means the person didn't pay 100% of his debt. We allowed 20% discount, so he actually only paid 80% of the debt, and that is equal to 600 rand. The total debt is 100. The discount was 20, so the money that we received was 80% of the outstanding amount. That amount was 600 rand. So if we want to know what was the discount, the one that we want, 20, divided by the one that we know, 80, times the 800, and that gives me 150 rand. So it means that I have to reduce his account with the 600 that he paid and with the 150 rand discount. The debtors control will this be credited with 150 rand. The account that will be debited will be discount allowed. Discount allowed is an expense that increases on the debit side and decreases on the credit side. And discount allowed will be debited with 150, indicating that the double entry is in the debtors control account. Issued a receipt for 200, so it means we receive money for the final payment received from the insolvent estate of our rate of 600 rand. So we received 200 and we will have to write the 400 rand as bad debts. We will therefore have to complete two double entries. One double entry for the money received and one double entry for the bad debts. The first entry, we will indicate that money was deposited into the bank account, so the assets increased with 600 and debtors control will be credited with the 600. So this double entry will be in my debtors control account. And I will show that the debtor owes me 200 rand less. The double entry is in the bank account. Then for the bad debts, we also have to reduce the debtors with the amount that we will not receive from them in the future. So we are closing his account, so we must take out all the money that he owes the business. And this 400 rand is a loss to the business because they don't receive all the money that they're entitled to. So the account that I will debit will be bad debts. Bad debts is an expense that increases on the debit side and decrease on the credit side. And this amount will go to the debit side of bad debts, 400, and we will indicate that the double entry appears in the debtors control account. The bank returned the check that we received from L. White due to insufficient funds. When we received the check from L. White, we recorded it in the debtors control account and we allowed discount. So it was on the 5th that we received money from him and we allowed discount. Therefore, he owes us that 600 rand that the bank returns the check. And because the check came back dishonored, we will not give him discount. So we will have to increase his account with the 600 and the 150. The first entry will be to increase the debtor with the 600, and we will show in the bank that the money in the bank decreases with 600, and this double entry is in the debtors control account. The second entry will be to increase his account with 150 rand discount because we will not give him discount if he didn't pay. And that means we will do this double entry in discount allowed on the credit side. And in the discount allowed account, we will indicate that we cancel this discount, so we reduce the expense and the debtors control account was debited.